GKFX Prime presents the Market Analysis Webinar.
Hi everyone, welcome to another edition of the weekly webinar. Got some interesting moves over the weekend. Bitcoin just hit 58,000 unbelievably. We've had gold testing and rebounding off the lows, which is pretty interesting, eyeing a test of 1800 as we speak. Also got stock indices, potentially a head and shoulders reversal pattern coming in there after the S&P 500 last week had 4 down days on the trot. That's the worst streak it's had in 2021. So some interesting developments here, potentially positive gold, negative stocks, always seemingly positive Bitcoin, but let's see what happens next. And also oil, as you know, has been on an absolute streak. And we hit WTI at $60 with all this madness in Texas and the deep freeze over there, but potentially that has put in a top around that 60 level. So let's dig into all that in more detail. And if you have any questions, any comments, obviously please just drop a comment on the video. It's great to have some interaction. Otherwise, just click that like button. That really does help. Okay, without further ado, let's have a look at the Euro chart. So pretty simple here. This is our daily chart. We talked about this last week. Had the rally up, the pullback, tested the previous resistance, fairly clinical technical analysis there. We've had a rally off the lows and we basically pulled back. Now what's interesting potentially here is that two things really. One is that we're really having a go at, I've not actually outlined it on this chart, but basically the 120 level. As was mentioned in the week ahead video, really is kind of key. If we could hold above this 120, which we did do in this recent drop, we rallied off it. If we hold 120, then it bodes well. And one reason we might be able to is at the moment we've got an inverse head and shoulders pattern potentially going on here, where you can see there's the left shoulder, the head, the right shoulder here. This is the neckline. So if I drop down to that 4-hour chart, you can see it in a bit more detail. Basically, if we take out this neckline, or in essence, move above, you can sort of see that there's an area of resistance. These old highs going through here, about that, and we've got the spike high there. If we can push through this, it looks decent for a move up to the top of the range again, and another push up to that 123.50 level, the high so far. Obviously, if this fails, maybe we roll over from the, there's a kind of couple of resistances in here around 122. If we try to break out here, stumble against 122 and roll down again, that's probably setting up a break of 1950. And then we're opening up if we take out here, yes, there is some kind of interim support through these highs here, but to me it would really suggest we're on for a deeper correction in the euro, a stronger rally in the dollar, and that would imply a test of 116. So at the moment we're in a bull trend, we're in a kind of corrective phase, and it looks like we're trying to make a push out of the correction up to the top side again, to a strong euro, weak dollar scenario, but we're watching 120 and these old highs, this old resistance, as a possible area where the price just rolls over for a bigger drop than we've had so far, down to 116. So here's the British pound, one of the outperformers in the FX market this year. So the big news, obviously, that we took out that 140 level. And naturally there's going to be a little bit of profit taking coming in for whoever was targeting 140 from buying at lower levels, and so naturally you can see a little weakness here. So you can see the price dipping down. For the time being, this is just a very minor correction within an uptrend, and so some potential support coming through from the old high, this little retest of the high already. And then what could be, we only got 2 touches so far, so this is not a legit trend line, but obviously if it comes in and supports these previous lows, as well as an extra little idea for some support to come into the market, basically around 139.50. So if we say that we hit a high of 140.50 we're talking about a pullback of 100 pips potentially before the trend resumes. If we do drop down to 139 again, if we take out the trend line, then maybe we're going through more of a period of consolidation, in which case you just look for this 138.50, which is this high and these lows. Roughly speaking, you'd expect that to be the area of support in a more sideways move if that's what's happening next. Further down, we've got the the area that we saw the big breakout of in early February that kind of catalyzed this move up to 140. So potentially move down. So this is about the 137.50 if we're looking for a steeper correction, but no particular need to think that is the case. If you look at the weekly chart, clearly the price came down heavily from 143.50 in the past, but within this candlestick, I mean, there's nothing particularly to suggest there's some major resistance between where we are at 140 and the highs here at 143.50. To me, having made this breakout, the picture is very much positive in the pound. Breaking out above here, I've been positive in the pound on the pound really since, and having done this break, of course we can see some steeper pullbacks along the way, and I've always cautioned along that since this breakout, but really the ultimate target looks like it should be this 143.50 up here, and potentially higher. If we're looking at a massive double bottom on a long-term basis, it could be substantially higher, but let's not get ahead of ourselves. So moving on to the dollar yen, been pretty good textbook move actually. We flagged the breakout when it happened, and we've rallied up. We tested the first high, pulled back from there, came back to the previous high there, found that as support, rallied up. We've tested the old high, pulled back from there. And so assuming that this uptrend is still going, then with the next rally should take us up to the next highs, which is around 107. So if we say we're around 105.80 at the moment, we'll look at potentially another 120 pips north from here. One thing I would caution is that if we drop down to the 4-hour chart a little bit, you can say that actually this is I'm not much of a wave counter. I don't think it adds too much value, but fair play to you if you are someone who does. But to me, this looks a bit like a 1, 2, 3, 4, 5. Normally the third wave is always the longest. If that's the case, then we're due an ABC. So this could be A, this could be B, up towards maybe 106 again, and then we get a C, maybe down south of 105. So seems to me like maybe a deeper correction is due, maybe even coming back to test these lows down here again. Hence I drew them in. If I zoom out a bit, yeah. So potentially, we've had a good move up, but we've had 5 waves after a big downtrend. Some big long-term sellers might have come in at this level here at 106. I might try and drive the price north of 105, potentially even down to test this low again, and then the bulls will need to hold this low to show that they're now in control to push the price back up to 107. So let's see how that plays out. For the moment, it's a bit too early to say, but look potentially for some short-term opportunities around 106. If we're getting kind of a double top there, that could be the sign that we're getting we've had the A, the B, and then C will take us somewhere but a bit more south. Okay, moving on to the oil market. Now I mentioned WTI hit the big 60 level, and obviously we got well even past 60. We got up to 62. It was pretty much the peak. And now what's interesting is the weekly chart. Have a look at this. These kinds of pin bar type patterns can often signal a turning point in the market. Now obviously we had one right there and we had 3 of them, and then it broke out. So it's just a first warning sign that potentially we're rolling over. I think I pointed this out before, but look at this one here. nice rally up. Here's one here, drop down. Here's one there, drop 2 weeks afterwards. Even arguably one here. And you can obviously, you find them dotted all over the place. Here's a pretty dramatic example up here. So watch out for these pin bars on the weekly chart. And what's interesting is that the body of the candle, so we rallied up to 62 in the week, but we closed the week below 60. And actually, having opened just south of 60, it means that actually the body of the candlestick is entirely below 60 now. And what I'm looking at is the body of the candle at 60. Let's just zoom in a bit more. Basically, for this to turn into a a 3-bar pattern here, the first thing you want to see is not for the, here's the first bar, here's the second bar. You don't want the third bar to move up past the first bar in terms of its body. So if the body closes up here, or even if the highs of the candle really push right up into here, it's not a game changer, but it just means it's not this particular pattern of the eyes, the nose, another eye. So actually we've already got as far north as we're going to go. We've already got as high as we're going to go if this particular pattern plays out. I've also got this level in mind because the markets aren't perfect and don't always perfectly play out to these patterns. As another level a little bit further up, where that would also be an opportunity just to just basically make a trade on the basis that 62 is the top. Obviously that's completely counter trend, but since we've come so far, the risk reward is quite alluring at this point. We could get a drop down to 57.50. That's these two lows down here, and I almost think not more likely, but probable. If we do find a top at 62, we go south of 55, or maybe we just test 55, and just beneath there is this previous consolidation. So always risky calling the top, but we do have, on this occasion, we have a bearish reversal candlestick on our weekly chart to support taking a more bearish view on this what has been a strong rally in the oil price. Right, moving on to gold. I mentioned this is one of the more interesting setups. Here's the situation. I've been complaining about gold being very choppy and unclear. I think it's actually made itself quite clear recently, because we've had the rally up on a longer term basis at least. We've had the rally up and we've pulled back 50%. We've rallied up. We've tried to drop below the 50% again, and as of the last 2 days, it's not really working, and actually the 50% level is still holding. To me, if the 50% gives way, naturally the next target is going to be the 61.8 Fibonacci, and it pretty neatly corresponds with these previous areas of resistance and support, down around 1680. So I think that's where we stand. If this is the lows here are basically 1760, I think. So if 1760 gives way, we're heading down to that 1680. If not, then this whole correction could be over, and we're at least rallying up to test these highs again and potentially higher. Gold, obviously, its fate is very much tied to the dollar, and so we'll have to see. The dollar has been a bit stronger this year. If we talked about a pullback in the euro. If the euro breaks higher, the pound already is. If we start seeing weakness in the dollar again, that would probably that would certainly help the situation with gold, which has been a real laggard since the summer. Okay, and silver certainly looking a lot more sprightly than gold even. I talked before about the fact that we had actually been making, in a crazy sort of way, higher highs and higher lows. So here we put in the low, we rallied up, pulled back, made a, broke these two highs here, so made a higher high and actually took out this high too, pulled back to these old highs, rallied up, found resistance at these old, old resistance here, these old highs, fell back, but just about held on to those same peaks again, with some spikes lower. And then we started the process again, where we rallied up massively during that kind of short covering GameStop mania, where it started targeting silver, and then we pulled back dramatically, but we held on to that high too. Rallied up, petered out a little bit at a 50% retracement of this drop. But we look at more recently, we've come back to this previous peak again, and we've rallied up nicely. And this, to me, looks pretty encouraging. Perfectly off that old high. Couldn't do it once, couldn't do it again, and even the day on Friday we closed positively. So I think this is where we stand. This has been a big level for a while, basically based on this high here. And what are we talking about there? Is that 2750 basically? Yeah, 2760, 50 to 60 is our resistance. And what happened here, you can see that we gapped through it. This was just a bit of kind of temporary madness, and which quickly resolved itself. But actually, as I said last week, I think that we're back on track for a kind of still generally positive outlook for silver. So now we need some confirmation. So we need to break back above this area of resistance, these highs here. Break above, obviously once it's, you can either buy now without the confirmation, or you buy later and wait for a pullback once you've got the confirmation. It depends on your trading style, but those would be the two bullish ways of going about things, based on the fact that we've had quite a strong bullish rejection here off this high, and overall we seem to be curving up, right? We seem to be curving up from the bottom left to the top right. We look like we're edging up towards another test of 30, to me. I would say bets are off if we, having successfully taken out 26, is that 26? Yep, having successfully held 26 twice, if we then go and crash below it, obviously, start rethinking your bullish ideas. Right, I mentioned the S&P 500 at the start. This actually went out in one of the daily articles. Oh, let me just... There we go. So we had what was potentially quite a bullish setup here with the tweezer bottom, rallied up, completely failed at the old high, fell down, and now we've kind of formed what is basically a neckline to a head and shoulders pattern. Left shoulder, head, bumpy looking dual right shoulder. I mean, I guess this is basically the right shoulder. I think it's actually perfectly equal. And now you can see futures are breaking below this neckline. So this doesn't, this is pretty short-term stuff. We're on the 4-hour chart here. So a minimum target for this pattern would be just the height of the head to the neckline, which takes us fairly neatly down towards about 3,800. Should the market start getting a bit freaked out by this big drop lower, then we start talking about 3,700 and these lows down here, potential retest of these lows from January. From January. So still a bullish market, but potentially an interesting little pattern to play here on the short term, playing a correction. You don't want to just sell for no reason in an uptrend, but for example in oil, we've got that weekly pattern. Of course it can go wrong, but there is some logic behind the sell, and there's some ways that you manage the risk, and there's ways that you ongoingly monitor whether the pattern is successful. So again, and same idea with the S&P 500 here. We've got an idea that maybe this is a head and shoulders pattern. If the price just rallies back up through 39,000, this is a false break lower, then we change our mind. We think, okay, maybe that's a false break of the lows. It's a fakey, and maybe we start turning bullish after seeing that. But for the moment, we're looking at breaking through the neckline, and we're thinking in terms of correction, and we've got targets, and we're thinking it through logically, not just thinking, oh, it's gone up a lot, time to sell. We've got logic, we've got reason for selling in an uptrend, which is generally a bad idea. No particular logic for selling Bitcoin at the moment. You would want to see a pullback before buying into it again, and the best I can really come up with, and this is the 4-hour chart, is that we have that previous high there. That would be a bit simple for where it pulls back to, but potentially just the lows here, and then you've got a confluence of the two trend lines coming through. And I would just say, I'd want to see the price come back in there, not get down as far as 50, but come down somewhere closer to 50, to be able to ride the uptrend some further, and just have the idea that if it does take out this confluence of support, and then particularly if it drops below 50 again, then that's probably when you want to be just a bit short term, not bearish, but just more cautious, less inclined to be buying Bitcoin. Alright, I'm going to call it a day there. Thank you very much for watching, everyone. Good luck trading this week, and make sure to subscribe to the channel so that you don't miss next week's. Cheers, everyone. Bye bye.